What I think people should be doing with their money right now is putting it into savings. I know a lot of people are talking about bargains in the stock market. I think if you're financially secure, you might want to start looking at that. But my prime concern right now is financial stability, both practically and psychologically. And I think having money in savings is the way to get that. Return on savings is not outstanding. It's about 2% at best. Interest rates are falling fast, but there are a few banks, alternative banks and credit unions that are holding fast around 2%. And when I look at the stock market falling 10% in a day, I think 2% isn't too bad. I think aggressive investors can certainly start looking at the stock market, but don't make a big bet and put everything in. You want to nibble away, put a little bit of money in after a bad day. I see the stock market down 10%. I think that might be a day to put a little bit of money in, but I think stocks have farther to fall. We just don't know how badly the virus is going to affect the economy, and stocks are very twitchy right now. Things could get worse before they get better. You know, the number one thing I think people need to think about with their finances as we look ahead is reducing debt and increasing your financial flexibility. So you want to build savings and you want to cut debt. If you're heavily indebted, I think making debt reduction is your number one priority. Makes a lot of sense to me. I think financial flexibility is the most precious commodity right now. If you hit a financial emergency, you don't have emergency savings to draw down on, maybe you could open up some money from your TFSA. I don't like to see people taking money to their RSPs. That's for retirement. It's also hard to get the money out. There's a withholding tax on your withdrawals. If you're strapped and you need money now, a home equity line of credit is something to look at. The interest rates on that are quite reasonable right now, and the repayment terms are flexible. You can just pay the interest back every month until you get on a more financially solid footing. Credit cards are the worst. The interest rates are around 20%. Interest rates are falling all around us, but not credit card rates. They're not tied to what's happening in financial markets. They're a totally separate thing. 20% interest right now is craziness. By all means, if possible, avoid running a credit card balance right now. And if you have a balance, hack away at it. My final word of advice is don't beat yourself up for the financial moves you made or you didn't make in the past. Look forward and think, what's the best way to put yourself on a more financially solid footing? There are some uncertain times coming. Batten down the hatches.